following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show here. Apologize for being out yesterday. Got some new things we're releasing, so trying to just get those situated, and had to take yesterday morning off to do that. Going to be talking to Tom this afternoon about some new things we're doing. Love being on his show. First of all, we're going to take a look at the currency situation. The euro, finally starting to kind of slough off again here. Here's the weekly long term on the euro. I'm expecting this to kind of break below 111.43.44, and then really get some momentum. It's kind of pierced at this, today and rallied back a little bit, but I'm expecting that to continue south here. I love how this thing's kind of made lower highs on the way down, and it's kind of compressing down into this area. I'm not looking at that POC on the weekly as support. Hope you guys are doing well this morning. Forgot to check on everybody. Here we go. Here's the British pound. Has pierced this 130.19 area. Reached a low 129.46. That's a little bit too rich for my blood on the south side, so I'm just sitting here waiting now. I really want to try to trade this from the long side, even though it's kind of similarly, acting like it could fall off the cliff here, along with the euro. And I love the dollar trade on the long side. And let me just reference that really quick while we're talking. Talked about 96.25.26 on the targets, that POC on the weekly. There it is. We met those yesterday and just backed right off. So the dollar relaxing a little bit today. Still like this from the long side. No support areas here to really buy this, but you should have had, the targets we talked about on the dollar reaching some targets. That's why I'm not super excited about, the British pound continuing to sell off here. I think we've got a nice little base here, but does look kind of scary. And the euro really not doing a little bit of an inverse trade as much as it should have been doing with the dollar rally. So my gold trade. Okay, so somebody in the den is asking, dollar goes up, what happens to my gold trade? Well, obviously that kind of by default, that's, if there's crappier dollars to reprice commodities in, then they should kind of by default go up. But I'm going to reference gold really quick here, Paul. I've been, pretty happy about being able to try to pick battles on support areas, block out the short side. 1309 was that latest area we reached a couple of days ago, 1309. There's that unfair low, 1309.60. So, the 31, 33 area is still big numbers up top. That's where you got to be looking to take some off, at least some of it. And why? That's that POC on the weekly and the unfair highs on the daily. It's kind of a big area. But I'm not a fan of shorting this particular instrument. And it's really acted well, in my opinion, as the dollar has rallied. And look at the dollar coming off a little bit. Gold just, blows a gasket here. And again, I've just been looking at this from the long side only because of, the technical action that I see is kind of allowing you to block out the short side. Now, if we had gone below 1309, just a little bit of an education here, the stops would have been hit for me. And then the next time on the downside to pick a battle on the long side, kind of Custer's last stance here on the weeklies at 1295, 1296. So now I'm looking for this to edge a little bit higher the new stops, and this is kind of the way we look at this, Paul, just to continue to talk about gold here. We love to look at dual time, multiple time frame confluence of inflection points. There's 1310 on the 240s. The unfair lows on the dailies were the 1309s. Now the way I look at it is for kind of orienting stops, this is kind of your trailing stop. Now I'd love to see a new 240 here a little bit higher. I mean, if you look at these 240s too, it's been kind of the first time we've broken out of these for a while. So, and I know there's a lot of other indicators out there to pay attention to, but I just try to keep it simple. I like to trade based on levels and just waiting until we get to these levels and, either, backing up and waiting to enter a trade or exiting a trade. And it just allows me to, for all intents and purposes, this is, how do you manage the bet? And how do you position size around those bets? And I hate to use the word bet, but really, you're placing the bet. You're Tom's going to kill me for using that analogy, but you're trying to, try to pick a battle around some of these inflection points, in my opinion, and manage risk. And you're placing a bet whether this thing's going to go up or down, really. So, you want to be able to orient stops and play defense as much as you can, because, you go to, you do anything in the gambling arena, you're trying to, the way to win is not to, capture one, capture two, capture one, capture two, and then somehow lose 10 or 15. It's kind of speculating. Good term there, Steve. Thanks for putting it in a better light. But you're trying to figure out how to do the risk reward balancing act and the winning percentage. And that's what automated systems do. And that's what we do in the background all the time. And we've got some systems that we're going to be talking about today on Tom's show, actually. But, position sizing too. I mean, you go into, again, I hate to use this analogy, but you go sit down at a 21 table, you bet the same way, you position size the same way, they've got the edge. Over time, they will win. So you've got to figure out how to get an edge in three different ways here. One of them is where do you wait patiently to pick the battle? What is your risk reward scenario? And then what do you do on the position sizing side? So those three things are really, really important. And going back to what I originally said, I like to kind of have areas that I can have a little bit of confidence on, that the probabilities are relatively high, where these, the definition of inflection point, if you look it up on the internet, is a possible change in direction or change in slope of the current slope. So that's why I like to use these levels. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And 517. You know, I've got a friend out in Tahoe right now, and it was the first time he's ever seen that place. Talking about out west, Tammy, who's in Vegas, I believe. That is a stunning place, huh? If you've never been there, that water is incredible. And you come kind of through that canyon opening from the San Francisco side, and he was literally just struck, talking to me on the phone the other day. Some beautiful places out west. Only thing around here is swamps and pine trees and stuff like that. It's nice to get out there and see those types of things. It's just a bigger situation out there. So gold, we were kind of digressing into, some not betting schemes, but speculation, as Steve Rhodes coined it pretty well. But, really those three components, as we talked about before, what's your risk-reward ratio, the areas that you're going to pick the battle, and the position sizing. It really, those three things really critical. And when you might look at this show and go, wow, here comes the boxes, here comes the levels, and this is all Logan's kind of focusing on. But on different time frames, it just allows me to kind of, okay, we've crossed these borders, or we've had some technical damage, or we're pulling back into support. It just keeps it simple for me and allows me to block out one side of the marketplace a lot of times, and that really helps me, because if I can, kind of look at it as we talked about before and say, I'm only supposed to be going long here. I'm only supposed to be going short here. I mean, that is huge, especially on a day trading level. So if I know the long-term trend is it's okay to be long, not okay to be short, I'm actually looking on an intraday basis a lot of times to feel like my odds are increased and being correct by, in that case, buying support, buying breakouts, taking off some weight when I reach some of these inflection points. All right. All right, so we've talked enough about gold there. Let's go into the S&P. So 2033 was a pretty big number, but we've also talked about this resistance area from before. around 2140, 2142, 2133. Did I say 2033? 2133. So you've got some resistance here. I'm showing it on the screen right now. Your breaths are still relatively negative on weeklies and dailies, and you've got even a higher resistance area at 2149.75. So you may be saying, well, what do we do? Hold on to shorts until we get to 2149.75. That depends on your appetite for risk. I mean, there's a chance to kind of use this area that we talked about from before that was kind of a big number, 2142. I'm a little bit more tighter on the risk side on trades like this right now. Again, talking about how do we block out one side of the marketplace, just because we got back into the balance area and on our long term and are seemingly hanging in there. Even though I'm slanted towards the short side here, you don't want to let this thing run away from you. And any weekly closes below 2033 are just going to put things really back in order on the short side. But this market has a bias towards the long side. You've always got to keep that in mind, and do not hang on to shorts forever. Soybeans. This is one where, caught some decent downdrafts on this thing into some targets that we were waiting to see if we could head lower at 944, 945. And 983 is something I tried to pick a battle around, and I'll just tell you why. We had a POC on our weekly 986, 980, 384, the daily unfair highs. So again, that got pierced, and we had a daily close above. So that's a big deal to me. So now I've got to sit tight. I'm a little bit more short-minded on beans than long, but if this thing spins around here above 983, I'm going to get less and less short-minded. So right now, I'm seeing if we can have a reversal, getting back in. This is new crop November beans, getting back into this daily fair auction, getting below that POC on the weekly. Remember, that's kind of the top of the mountain, the mode of the profile in the long term. And this is a big deal. The longer this thing spins around up here, the more and more shorts are going to be a little bit more panicked. Just reading something funny in the den. So, right now, this is kind of a no trade. I'm not exactly ecstatic about going long this thing, and I'm not exactly ecstatic about going short. So, sometimes, and I think Steve has said something about this at times, Steve Rhodes, sometimes not having a position is a trade in itself. So, and he gives some great webinars. I don't know if you guys have caught the most recent ones. But that's kind of a position in itself as not being in the market. So this is kind of a wait and see for me. We've talked about the dollar. I want to hit some of the other currencies really quick. I want to look at the yen. This one's really not making me happy. I was considering the yen to have a chance to really devalue itself again. Now we're just caving in below support here, 101.34. I've gotten stopped out of this trade, and next time for support is 133.34. That's those weekly unfair lows. But I'll just be honest with you, this now is I really expected this to get back into 103.50, 152, and even higher. This is a little concerning for this trade. Again, I've gotten stopped out personally out of this 101.34 area, a little bit too deep in the hole here for me to hang on to those appetite for risk situations. But you've got another chance down here, 133.34. But I'm a little concerned here now. Looking at this action, you're kind of compressing down on a longer term. I'm going to try it one more time, and then got to call it quits below 133.34. So that's the way I'm looking at the yen right now. Aussie dollar, I still love this trade from the long side, and really nice support. We caught a move here off 74.78. That's where kind of orienting the stops, a little bit of noise. Australian dollar, with, let me just reference this too at the same time. Shanghai trying to hang in there. I just like the Aussie dollar from the long side. I'm just blocking out the short side constantly on that. And I think China's got a really good chance to move up here. That would, to some degree, help the Aussie dollar move up against the U.S. dollar. Let's take a look at the silver trade. This is one I've really been impressed with. And on the long term, again, trying to find areas to play defense, get your risk-reward scenarios in line. We're going to talk about this silver trade a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we were talking about silver, and now the new stops on silver would, for me, kind of be trailing stops below 1945, in that neighborhood. So we crossed some new borders there. It's nice to see this thing move up, but the weekly was kind of where the predicate of the trade, again, picking the battle, getting the stops in, figuring out where you can take some weight off if it works in your favor. 1945 was one of those areas before, and it's one of those areas again. So you've got to be a little bit lighter up here. And That's kind of where silver is. Get to the right thing here. Okay, so crude, not a big fan of being long this. We've kind of gotten back up into that 44.85, that big number that we talked about. But I literally don't see a lot of direction in this. I don't even know if that inflection point is really seriously worth paying attention to. So I mean, crude I think is kind of a no trade right now. I don't see a massive amount of leverage here. I really would love to see this thing get down into 41.89 to really start backing up the truck on it, but it's not there yet. Apple. So this is again another thing that's been kind of a no trade to me. Looks like we're printing 114.25 this morning. Here's Apple. Here's that big 110.23 weekly unfair high. Kind of in the ether up here right now. So if you guys are thinking you're going to miss the train, the market's going to be open tomorrow. Relax. Just again, wait for some new inflection points. Remember, change the slope, change the direction type possible scenarios, high probability setups. You just don't have anything on the long term right here. And if you're thinking about shorting it, you just don't have any place to play defense against, except, if you want to try to use these 240s. But again, I mean, I'd rather see long-term inflection points on this either be approached or broken. Let's take a look at ExxonMobil. Okay. Looks like we're printing about 83 this morning. This is one that really showed some serious relative weakness. And, we had that break recently below this 86.38. Okay to be short, not okay to be long on the weeklies and the dailies. And if I go into the scanner and I go to the XLE section, there it is. I go down to ExxonMobil, you'll see, I mean, this thing's been below profiles for a while and really hadn't had any green shoots to really pay attention to over here. If you can see these 240s, that bottom 32 arrow down, that means that we've been in a downtrend for 32 consistent 240-minute bars. So there's really been no reasons to try to get long this thing. And really, you won't be alerted to that change in tone or green shoots or whatever until some of these things start changing, at least on the short term. So again, kind of a nice feature, just to, you want to put something on your radar screen, put it in your custom list. You can kind of see real time when these things are starting to breach technical changes. So TSO. Not a bad little trade here, coming down in the weekly on for highs, 80.23, holding up relatively well. There's our little puppy SWN. Not breaking out again yet. Major support on this is 12.11. And intermediate support's 13.35 on this. Okay, get to my screen again here. Let's take a look at Microsoft. They have so much cash. Increasing their dividend. Yeah, I mean, relative strength angles. Obviously, this is, not one that wants to, be in the cellar here. Printing this morning 57.50. Company's got a ton of cash, can weather quite a few storms, obviously. And I love how they kind of started getting in the realm of reality on some of their products and pricing. So long-term view on this, I think, is still bullish. You got support at 55.83, and then you got insane support at 54.31. I'm not a big fan of shorting this stock. Let's take a look at AT&T. Okay, so this is another reason to start looking at when these profiles appear. When you have that yellow bar there, especially in the scanner, that'll be a, kind of a yellow peel back little part of this cell. You'll see them sometimes. There's AutoZone. That means that we've got a new, in this case, or back then we had a new supply area happening here. And then, that's an indication to start taking some weight off. And definitely these unfair highs on the weekly are a situation to take some weight off. So, now you might have saved some bucks here on the long term, just kind of waiting patiently until we either break out again or find support again or have some new profiles to lean against. Now you got 38.82 sitting down here is pretty serious support on AT&T. You've got intermediate areas that you could have bought support here and tried some things with some stops, but we broke dailies at the same time. Then you're kind of just sitting here waiting on AT&T. Let's take a look at my second favorite place to eat. You guys know the first place winner. Chipotle. All right, so this has been a little nerve-wracking. Exactly. This has been a little nerve-wracking. Starting to show some hints of breaking out profiles. I really, you could look at this, oh, wow, triple bottom, well, blah, 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 whatever. But, to me, it looks like, we're kind of lower highs, compressing down into it. This is the type of situation, it can do a big, serious flush here. It's a relatively weak stock relative to what the market's been doing. And I wouldn't be buying this down here anymore. I'd be looking to, believe it or not, sell breaches and especially weekly closes below 392.99. Kind of had that before, but that was kind of a little bit of a noise area down there. And you want to kind of catch these things as they really start flushing. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yeah, so we covered Chipotle, a little bit more bearish on this than trying to buy these inflection points down here. But yeah, I was telling everybody I was going to go out to Corolla and look at that place last weekend, but there was just kind of bands of rain, and I wanted to ride the motorcycle, so I never got out there. But it's, man, if you guys ever get a chance to get out that way, that's kind of on the edge of desolation. Once you get past a little town, there's not even paved roads past it, and it's on the Outer Banks, kind of north, headed almost into Virginia. Just really, really sweet spot. You ever get down to Ocracoke too, you can kind of stand on, that's another Outer Bank down south. It's about 14 straight miles of unmolested, no houses, seashore, horses running around on the sound side, waves crashing on the, I mean, it's awesome. Oh yeah, it's a cool spot. Used to be really, really cool down home. They kind of, the town's kind of gotten a little bit of foo-foo in it now, but it's a cool scene for sure. Nothing to do out there except relax. All right, so UTX, had an email about this one. Is it time to buy it? Yeah, I'd rather see the green shoots on this one, or at least getting back into some form of semblance of normalcy within balanced areas on the daily. I just don't see anything really to write home about to start picking battles here on the long side. Excuse me here. Let's take a look at Adobe. Okay, so I don't know who doesn't have a subscription to an Adobe product out there right now. These things, these guys really, I mean, I don't know. If you guys run an office, you know what I'm talking about. But so we are past the weekly unfair highs here. And again, this is another example, even if you just block out the earnings coming, which you know, I'm a big fan of not being in stocks when earnings come out. Either way, I mean, they can, you know, you're rolling the dice a lot of times. But, you know, the stock's been relatively strong. You know, you kind of like to see this in a market that's gone sideways, a stock that just kind of continues to make new highs. But right now, we've opened up 105, 106. What are we at? 106, actually. So now you got support at 103.29. I don't know if you need to look at this as being a cowboy short in the opening. The S&Ps can go up. You know, it could move higher. So again, support's at 103.29 now on Adobe. Amazon looks like we're 782 printing this morning. So little bit higher in yesterday's close, and we talked about this one getting back above 773, and then kind of spinning around here. This is not what you want to see on the short side either. We're going to hit Facebook really quick, and we're going to look at TCK in just a second. Facebook, real similar situation. Don't stand in front of a train. It is what it is. If you think this is kind of sick and doesn't make sense, that something keeps going up like this, just this is Facebook, and here's the 20s, and here's the 120s. So the party may not be over. Just remember what Google did, Apple, a couple other things. Until it technically starts breaking down, don't overthink the thing. It is what it is. Let's take a look at TCK. Tech Resources. Is that a real print this morning? Yep, 1807. So this is another thing too. I mean, good example of just waiting for something to technically kind of turn around and start breaking above profiles on the long term. It's like at what, 477 that happened. So then, you're using the weeklies or the dailies to try to regulate the trade up. I don't know if you're thinking about buying this. Whoever said that in the den. It's definitely something I'd try to avoid on the short side. Here's the daily on TCK. So again, outperforming the market, had the technical turnaround, probably doesn't have a high beta value. But again, it's not time to short it if you're thinking about that. And if you're thinking about going long, you've got massive support around 1650, 1680, somewhere in there. Short-term support 1744 on this stock. But pretty serious support around 1650, 1680, 1660 in there. We got to go back to my favorite company, Wells Fargo. They're slamming the guy on Capitol Hill, interrogating him. He's not even breaking a sweat. I don't know if you guys have watched any of that. The leader of the, what would I call this? What was that thing that they invented in Kennedy days to attack the mob? The RICO Act. I don't know if they should throw that at this guy, but the head of a criminal enterprise of more than 5 people. It's 20 years minimum. I'm not saying just use this guy as an example on that level, but it's amazing. Somebody uses your phone to do a drug deal. They treat you as if you did the drug deal, even though if you had no reason or understanding of what was going on because somebody used your phone. How can they do that and not actually say that this guy didn't have anything to do with this? I mean, they got to make an example out of a couple of people. This nonsense has got to stop. You got pretty serious resistance on this stock at 47.11, which it came off yesterday. There's the daily unfair highs on the profile that appeared on the opening, and that kind of coincided with the 47.45 on the weekly. Thanks, David. I can't read that while I'm on the air because it takes me a long time to read, being from North Carolina. So that's what we talked about before. You've got it. You got that, kind of close below, and then those rallies back into those resistance areas, especially when they line up like that, the daily and the weekly. Those are pretty powerful. Thanks for writing it slowly. But I love your show, David, by the way. You got to look at those areas as really ripe opportunities, especially when you've got a stock that has got some volatility, probably going to continue to stay in it. You can at least use those to kind of play defense against, and those are kind of nice when they line up like that. But again, I think that regardless of whether the company makes money or not, I think you're going to have some just kind of people getting concerned with some more fundamental news coming out on this stock. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I don't understand how this is any different at Wells Fargo than me stealing David White's checkbook and actually just writing checks blindly, and grabbing the money. I mean, like, they took somebody else's, created an account, stole money from them. It actually happened to me. You guys know that. I've talked about it. How is that any different than stealing somebody's checkbook and just writing yourself checks? I mean, Yeah, they need to seriously review what Jamie Dimon's kind of been involved with. All right, just to sum it up, we got a couple minutes left here. S&P's still a little bit more bearish than bullish on this, trying to, this resistance area, you can treat it as a DMZ, 2142 to 2149, or just kind of be a little stingy and kind of pick battles in two places. I'm still a big fan of not being long the S&Ps. Crude, no trade. Gold, Really, really liking this from the long side, and now we're getting up into that 31, 33 area like we did before. Remember, that's where we kind of backed off the other day. There's the inflection points on the downside, 09, 10. There's that 31, 33 area up top. So you got to be really looking to take some weight off here, if not all. Don't be a hog. That's a pretty good move there, $20 an ounce. There's that daily right there and that weekly POC. Notes, just I think that's just the long trade of all time still. We're going to look at Johnson & Johnson really quick. This is one we've been talking about since, we had that kind of close blow, and then there's a retest. That's kind of, what we're looking for, kind of the Wells Fargo situation. Same example, going back and retesting those inflection points that were former support, now resistance. Something's wrong here. I still think Johnson & Johnson, I mean, you got a new profile. They keep edging lower, crowding it. Any market help, I think you're going to get another flush below 117.58 on this particular stock. Apple, we talked about that one. Not yet. We talked about Facebook, talked about Amazon. Those are the eternal longs until, just the same as Apple. I mean, like if you go back in time, Apple had given you chances to short it when it started breaking long-term technically there. That's it. Until these Facebooks and Amazons start doing moves like that, and here's kind of where here's the profiles, here's the red bars, the green bars. But until these stocks that are up in the stratosphere start at least giving you some reasons that it's okay to get the toe in the water on the short side, just pass on it. You don't have to be a hero with these things. Just wait for somebody else to figure that part out, and then you get the easier trade as the technical damage kind of ensues. But right now, those Facebooks and Amazons are still longs, and whether you want to hear that or not, it's pretty much that's the case. Coca-Cola, some new inflection points down here. We don't need to talk about Coca-Cola. Why did I type that up? Netflix. I like this one. We're kind of spinning around here above this 96.18. The only way to get short at this again is just to have some daily closes below 96.18 on Netflix, and it's just not there yet. Guys, stay tuned. TFNN all day long. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.